Welcome, thanks for joining us. I hope you're all continuing to keep safe and healthy. Just a couple of house rules. If anyone has any questions, please put them in the Q&A box below. We will try to answer them as and when we can, and if we run out of time, we will follow up after. So UHY have been supporting our clients as best as we can. We've been sharing lots of content and running webinars to help you gather the information you need for business survival. We are always keen to hear feedback, so if you have any ideas on what else we can do to support you, then please let us know. We're really excited about partnering up with Float, which is an award-winning cash flow forecasting and scenario planning tool, integrating with Xero, QuickBooks and Free Agent. Here at UHY, we are always keen to embrace technology and finding solutions to make your life easier. So we have an exclusive deal with Float to provide our clients 2 months free access and a reduced fee license thereafter. So today I'm joined with Sam, who is a key account manager at Float, and Dave Haley, who is the managing director here at UHY East. Sam works with Float's accountants and bookkeeping partners, including us, UHY East, to support them offering cash flow support and guidance to their clients in these challenging economic circumstances. Dave has been leading UHY East and our internal team in these challenging times as well and supporting his clients. So we'll kick off with the questions. Dave, can you give an example of the clients you've been working with throughout this pandemic and which clients have been most in need of cash flow?
Morning, Emily. Yeah, it's been a bit of a mixed bag, really. I mean, some industries have clearly been hardest hit when you look at the retail, leisure and hospitality, airlines and recruitment sectors, which have all seen dramatic drops in business overnight. I happen to act for a number of garden centres, for example, who obviously as retail businesses, their income literally reduced to zero. And as cash businesses, they also didn't have debtor books to rely on to see them through. They went out, sought some funding to see them through, and ironically, that industry, since lockdown has eased, they've been absolutely booming, and each of my clients in that sector has been reporting record week upon record week, such that they're now sitting there with pretty healthy cash balances. Likewise, I've seen some of our clients pivot their businesses. So there's one in particular who has been doing water-based Legionella testing for a number of years, and they've now moved into actually doing COVID testing on individuals. So again, they're very busy, but they've had to go and seek funding for a different reason, and looking at their cash flow for a different reason, because they were actually heavily investing in being able to kind of maximise the opportunity. For the vast majority, though, whether service or goods-based, there's been clearly a need to consider the impacts that COVID has on normal working capital conditions. And without wishing to appear too negative, certainly at the outset of this webinar, the severity of the impact is likely to only just be getting felt, and is likely to increase over the months ahead, as we have things like furlough coming to an end, as we have tax liabilities due for payment, and of course the borrowing that people have gone and sought will start to be due moving forward as well.
Okay, great. I love the word pivot. We've heard that a lot actually since the start of lockdown. And Sam, same question to you. Can you also give us an example of the clients you've been working with and which clients have been in most need of cash flow?
Yeah, absolutely. Just before I answer that, thank you very much to Emily and to Dave for having me on here, and good morning, everyone. I think for me, I've been very fortunate over the past sort of 6 months to be able to work with a lot of different firms, with a lot of different clients in various different industries. Similar to what Dave mentioned, I think you'd be hard pressed to find an industry that hasn't been affected by COVID. I've seen things like a small craft brewing company that pivoted towards online retail, and then throughout sort of lockdown, and we're very successful in keeping the cash coming in there, but they've then had to pivot back to servicing the pubs afterwards, because that's where the demand is. People order less in their house, they go out to pubs. So that kind of constant changes in business model has had demands on their cash flow. So that's been sort of a real focus for them. I've seen sort of a football club up in the north of Scotland sort of drop in revenue completely, lost ticket sales are a massive part of that. And so they've had to kind of delicately monitor all the cash reserves they have to ensure that they're able to continue to pay for those essential services. So, pay for the rent on the stadium, continue to pay their staff members where they can, introduce furlough where possible. Managing all those moving parts have been really, really difficult. And then finally, I've actually seen a coffee shop in Cardiff, who, very much like every retail business, as Dave said, with the garden centres, they had quite a small shop, can only fit, literally with the social distancing guidelines now, I think maybe 2 people in their shop. So they've actually been pivoted towards takeaway coffees, but in the lockdown period, they actually were delivering oat milk around the city centre in Cardiff, so completely diversified, took on a bit of a postman Pat sort of role in that period. So yeah, it's been great to see the ingenuity in the face of quite difficult circumstances. But I echo entirely what Dave said. You've got really some significant cash flow milestones over the next few months. You've got furlough ending. You've also got, dare I say it, the threat of a second lockdown. I know certainly up here in Scotland, Aberdeen was shut for probably about 2 weeks, I think, after they had a local breakout. It's happening in Glasgow at the moment, some parts of Glasgow too. Fingers crossed it doesn't happen in Edinburgh, because I'd be absolutely gutted if it did, but of course understand. So those sort of things with the upcoming, if you're going into that period at Christmas where that could happen, second lockdowns could happen right before VAT, federal payments need to be made, and bounce back loan and CBILS loans need to be repaid. Cash flow is more important than it ever has been, I think. So yeah, hopefully that gives a bit of an insight as to what I've seen so far.
It's interesting to see actually how many companies and business owners are now moving onto the cloud as well, and a lot of them have come online, obviously. But thank you both for the examples. It's fair to say that cash flow forecasting isn't just for large organisations or a one-off plan. It can be used in any business, and it is essential for business survival. So just to run through the agenda quickly, we will first just touch base on cash flow forecasting, and then planning for uncertainty, realistic assumptions, and finally scenario planning, with Sam obviously providing a float example. So moving on to what is cash flow forecasting. In simple terms, cash flow forecasting is money coming in and out of your business. It is not the same as checking your bank balance on a regular basis. Funnily enough, I actually had a call last week with a business owner, and when I asked if they had any means of a cash flow, the response was, yes, I check my bank balance now and again. So I challenged this by asking if he knew what the business's cash flow looked like in the future, and whether he was confident he will have sufficient cash to meet the upcoming tax liabilities. He couldn't tell me for certain, but he thought as a small business, he doesn't need a cash flow forecast. That's only for large businesses. Also, he found it to be quite an intimidating task as he's not an accountant. So I questioned, why doesn't a small business need to know the upcoming receipts and payments? It doesn't have to be complicated, but it will provide you with an idea of whether you will need to bridge some gaps or have surplus funds for reinvestment. Where do you see your company next year? What happens if demand continues to fall or your customers are unable to pay you? Checking your bank balance will not tell you that, and you could end up in a tricky situation with a cash deficit and payments due. So, Dave, I understand you used to be an insolvency practitioner. I suspect you've seen some of the worst case scenarios where companies have not planned their cash flows effectively and the cash demands on their businesses have spiraled out of control.
That's absolutely right, Emily. They were relatively dark days for me in that profession. But yeah, I mean, there's the old adage that gets overused quite a lot. Turnover is vanity, profit is sanity, and cash is king. And whilst it's overused, it's absolutely right. I worked with a medium kind of sized business, construction business, who lost sight of their midterm cash flow needs. That they'd previously been highly profitable, and throughout that period, everything looked like it was going okay. There was no signs of any particular problems. But as soon as they entered a period of trading difficulty, it just came to show how kind of ill-equipped they were for looking to the future. Effectively, what happened was overnight they established that their their projections had emitted a few £100,000 of liabilities that were due for payment pretty immediately within a 3 to 6 month period, and ultimately they didn't survive. In that case, it wasn't the loss on paper which hit them. It was simply a lack of cash. And more recently, kind of since I've moved away from the insolvency world, again, I now work with a lot of service-based businesses who, for whatever reason, have kind of maintenance contract type arrangements whereby they will receive money on a periodic basis, so quite often quarterly, sometimes even annually in advance, and therefore you can take a snapshot of their cash reserves at any particular point and they'll look fantastic, and so the owners may sit there and think that they're in a really good position, but it doesn't take much when you then you look at what they've got coming up over the months ahead, when they've not really got any income coming in because they've had it in advance, but they still have all of those outgoings. That actually you can see that whilst things can look really rosy at one moment in time, it doesn't take many months, 3, 6, 9 months down the line, it's actually looking quite bleak, and it's particularly important that people track that, otherwise their business is in real danger. From my perspective as a former insolvency practitioner, the reality is that no business fails because of a lack of profits. It's because they run out of cash. Don't get me wrong, I'm an accountant, so that's not me saying that profitability isn't important, but in the majority of cases, it's fundamental to creating cash, but planning for your cash reserves is a priority beyond that, I would say. And that's probably more relevant than ever when I look at what I spend my time doing now, because I head up our tech and high growth sector now, which obviously is made up of clients who not exclusively, but traditionally have characteristics of very little turnover and quite often heavily loss-making in the early years. But funnily enough, they tend to be some of the best clients that I have at cash flow planning, because they've gone and got investment. They know that they've got a finite resource of cash, and because they don't have income, because they're not likely to make profits, which is going to turn into cash, they're very, very good at projecting forward and knowing when it is that they're going to run out. So I think whilst they're businesses that don't focus on necessarily as hard on the top line initially, and certainly aren't profit making, they're a really good example of where cash flow planning is vital, and I think as applicable to any other business in any other industry.
That's actually incredibly useful, and I completely agree that cash is king. If businesses weren't concerned about cash flow, they wouldn't have paused subscriptions or deferred payments to actually go out. We've seen a number of clients request a cash flow forecast for the CBILS applications. However, this shouldn't be looked at as a one-off exercise. Cash flow forecasting should be one of the most important reports and updated at least monthly, if not on a weekly basis. It also doesn't have to be complicated and a mundane task, but we'll cover that more further on in this webinar and show you how Float can actually really help with that. So moving on to why cash flow forecasting is so important. I've covered this a bit already, and Dave's example just shows the stark reality of why it's important in normal circumstances. Now moving into winter, obviously we don't know if there will be a second wave. We are in a recession, and if any of you watched our webinar last week on the 1st of September with Equip and UHY, there is still a question around what type of recession this is going to be. They touched base on different types of recession, whether it will be a W shape or an L shape. And this is very relevant to cash flow forecasting, as it is based upon what type of recovery there is going to be and how to pick up the growth. Now is the time to build a strategy on the what if scenarios. If you would like to catch a recording of the previous webinar, obviously we can send this on, following on from this webinar within an email. What we can say for certain is that obviously the government schemes are coming to an end. The furlough scheme ends at the end of October. The staff team will be returning to work, and tax liabilities that have been deferred will need to be paid back. Planning these cash outflows and reviewing different scenarios will help the survival of your business. Also, the coronavirus interruption loan scheme and the bounce back loan schemes are coming to an end. So if you haven't already applied for the government backed loan schemes, there is still time. Planning your cash flow will certainly identify whether additional finance will be needed. Should you need any more help or advice on these schemes, or you would like to explore alternative finance options, we are hosting another webinar with Capitalise and of course UHY Corporate Finance on the 15th of September. So please don't forget to sign up to this. Again, we can send you a link after this webinar. So realistic assumptions, ensuring your cash flow is realistic, including the assumptions you make, is incredibly important. As they say, rubbish in becomes rubbish out. So to get up on the right tracks, ensure you have up-to-date financial information which is fully reconciled. Having a cloud-based accounting system such as Xero or QuickBooks instead of manual records or a server-based accounting system will really help. When preparing a cash flow forecast, you will need to make some assumptions such as the size of your workforce, projected sales, timing of payments from your customers, availability of stock, and so on. If you are able to try and carry out some research before making these assumptions, then this may help in keeping them realistic. You can review previous trends or speak to customers to agree payment terms or stock availability. Frustration comes from the unknown and uncertainty. When preparing a cash flow forecast and under the current circumstances, you may feel stressed or under pressure to make accurate assumptions. Building flexibility into your cash flow model will enable you to tweak certain elements and provide a more realistic outcome. When more areas become known, the cash flow forecast can then be flexed. Sam will obviously show you how Float can help you do this later on. So Dave, another question for you. As the new Managing Director of UHY East, I'm sure you didn't expect your role to start off in such a way. How have you managed to keep the assumptions realistic when preparing a cash flow forecast?
Well, firstly, Emily, you're absolutely right. I didn't envisage the year that we're all experiencing when I agreed to take the role last December. It's been something of a baptism of fire, but a challenge that I and the team around me have embraced. The first thing we've had to do is take a reality check. As a business, we've been on quite a growth curve over the last few years, both organic and through acquisition. And we were certainly forecasting for that to continue into the current year. The reality is we're not in that place now. It's the environment isn't as it was pre-COVID, and like many of our clients, we've been adversely impacted, which meant we've ultimately had to go and revisit those projections, and in particular those assumptions that we made back end of last year and at the start of this year, when we were projecting not just on a profit and loss sort of basis, but more importantly on a cash flow basis as to what the year was going to look like. So kind of taking a step back, taking a reality check, taking stock of the situation and kind of breathing and thinking about it is absolutely the first thing that we did. And whilst none of us have lived to experience a pandemic of this scale or nature before, we have, of course, been through economic downturns previously, and a very good way of kind of staying realistic, if you like, is being able to look back and reflect on what's happened in previous downturns and previous recessions to understand the trends of what may happen. I was with UHY 12 years ago when we went through the recession in 2008, 2009. And there were things that happened then that we may well expect to happen now, and so a very good way of making sure that you have realistic assumptions and projections is by learning from those experiences of the past.
Yeah, sure. And have you got any tips on making realistic assumptions from what you have experienced with UHY East and the advice you've been providing your clients?
Yeah, I mean, certainly making realistic assumptions is incredibly important. There's absolutely no getting away from that. Almost contrary to what I just said, it's also incredibly difficult though when we're in a situation which we've never seen before. So whilst we have seen recessions, we certainly haven't seen global pandemics quite of this scale. And for this reason, I would say the key thing is to be prudent. Plan for the worst, particularly from a cash flow point of view. Plan for the worst, even if you're hoping to achieve a far better outcome. I use with my clients, I use an example that we've done within our business. So back when in March, April time, when we were revising our forecasts for this year, the first thing that we did was we increased our debtor days to 150% of normal levels. So by that I mean that we anticipated across the board, on average, it would take about 50% longer for our clients to pay us than they normally would. And that one change in assumption alone made a huge and absolutely fundamental difference to what we were projecting our cash flow to be throughout the rest of this year and into next year. And that informed the decision that we made in terms of discussions that we had with the bank and other things that we were planning to do. I mean, as it happens, I'm happy to report that as things stand, at least, our cash flow has held up, and we've managed to keep our debtor profile much more stable than that, which is great news. But you know, kind of as both Sam and I mentioned earlier, we've got a lot of things ahead of us over the months ahead in terms of payments to be made. You know, clients needing to make payments to HMRC, starting to repay loans, and furloughing coming to an end. So I don't think we're out of the woods on that front yet. And having that assumption in there as a kind of a realistic assumption, I think, even though it hasn't come to bear yet, it puts us in good stead for the months ahead. The other thing that I would say, absolutely, is to speak to people. You know, seek advice, seek help, whether that is from professionals such as ourselves, or whether that is just from people around you in your business community. You know, I can honestly say that having taken on this job as managing director at the start of this year, as I say, I wasn't expecting to make some of these decisions, and at times it kind of feels quite a lonely place when you are the one that carries the can, when you're the one that's responsible for it. And it's been incredibly powerful to me to spend time talking to the business owners of some of my clients and some of our other clients, talking to other managing directors from two perspectives. One, because it gives you some comfort that they are experiencing the same things that you are, but also because it gives you an opportunity to share ideas and share stories that actually help you to make some decisions with your own business. So I think whenever you're preparing things like forecasts, projections, getting that kind of external view, getting a second pair of eyes over it, for someone to help challenge the assumptions that you've made, is really powerful, because on reflection it may then be that you think actually there's some changes that you might want to make.
Yeah, and that's great advice, and thanks for being so honest. I actually like you touch based on feelings, and it's easy to tell business owners to do this and to do that, but how you feel and having the support you need around you helps alleviate the emotional stress behind the current circumstances, so we can focus on the journey ahead and how to navigate through the change and plan for uncertainty, which brings us on to the next slide. So I'm sure everyone had a different idea of what 2020 would hold. Someone told you at the end of 2019 that there was going to be a global pandemic, we would be in lockdown, and the UK economy would take a nosedive into the biggest recession since the 1930s. I'm sure you wouldn't believe it. Planning the future survival of your business is tricky when there is so much we don't know, like Dave said. It's useful to reflect on what has happened over the past few months and how this has impacted on your available cash. As we have already been through a lockdown period, we can use this as a base to what happened previously. Did you have any budgets? If so, was there much of a comparison between budgets and actuals? Were the assumptions you originally made correct? If you can learn from the past few months, then this may help you plan for the future. So Dave, how have you managed uncertainty within UHY East, and what advice have you provided your clients?
I think there's a couple of themes here. First and foremost, there's two primary approaches that you can take to any forecast. There's a top-down or a bottom-up approach. So quickly, the top-down route looks at the marketplace. It assesses the level of market share that you may have, which represents your income, and then it builds out projections based upon those expectations. By contrast, the bottom-up approach, as it kind of suggests, it first looks at your cost base, it considers your spending plans and how you might alter them, and it works upwards to determine the minimum level of income that you need to generate your costs, i.e. your break-even position. both routes are perfectly legitimate, and in many cases you can use one of them to cross-check the other. So from our point of view as a business, it's certainly something that we do where we will perhaps look at taking the top-down approach traditionally, but then we'll do a bottom-up approach to make sure that it all cross-casts and that we think it tallies and makes sense. What I would probably say is that in times of uncertainty such as this, the bottom-up approach is perhaps more rigid, more stable, will give you more comfort, because the one thing that you can be more certain of is the costs that you've got as a business, whereas you may be less certain at the moment as to the income that you can generate or that you will generate in the months ahead. So if you take that bottom-up approach and focus on the variables that you can control, you're likely to get a more realistic outlook. The second theme is then the use of scenarios. You know, you've mentioned it already, Emily, and obviously it's sitting there on the screen. And I would say this as an accountant, but I do love to run a few scenarios. You know, we do like to look at variables and challenge assumptions and that sort of thing. But whilst a headline target set of projections is great and something that we would all want to aspire towards, having the ability to pose some what if questions is really useful, and I think it's a really powerful tool because it gives you a bit more comfort again as to what happens if something doesn't quite pan out the way that you want it to. So some examples of that may include things like, what if turnover is 10% or 20% less than we've expected? What if our margin gets squeezed by a few percent? What if we can't shave costs in certain areas, or what if we can shave costs in certain areas? It doesn't always have to be bad. There can be some positive scenarios that we throw in there. But the use of scenarios can help to show the sensitivity in your cash flow requirement, and obviously I alluded to that earlier with the assumption that we made of putting debtor days in at 150%, and that one change alone made a fundamental difference to our projections. Now, that isn't the scenario that we're planning for and that we want to happen, but it was absolutely one of the scenarios, and in truth, we're sitting here as a business with the headline target that we're aiming for 2020, but behind that we've got 4 other scenarios that we've planned out to make sure that some of those what if questions, that we're prepared for them, and that we will see ourselves through if any of those things do happen.
Yeah, and like you said earlier, that it's so difficult to know what's coming next, and I think the scenario planning tools available are so helpful for business owners to make informed decisions. So Sam, coming to you now, as the key account manager at Float, you obviously talk to a lot of accountants and bookkeepers every day. So a similar question for you: how have other businesses managed uncertainty, and what advice would you give?
Yeah, good question. I think one of the key things I can sort of separate out into 3 main parts. The first is understanding your cash balance as it is today. The second is understand what your future cash balance will be at any particular point. And then the third point is analysing those future cash balances. How could you improve them? How could you work towards them? How could you extend them, extend the runway, and so forth? So to start with that first section, I think understanding the current cash balance is incredibly important as an anchor point. Understand where you stand as of today, or what's your current situation. And I think one of the most important things there is having a robust data, robust data in general, but just a robust cloud system. And the reason why I say that is that what I've seen so much is people invest because they don't have a good data stream. So if they're not leveraging tools like Receipt Bank, or they're not using, even start tools like Xero, QuickBooks Online, Free Agent, and they're not leveraging things like Receipt Bank, HubDoc, Xero Analytics, so those sort of tech tools. What they do is they're spending so much time understanding, okay, where are we today? So they're getting the spreadsheet out, they're getting maybe their pen and paper out, they're trying to work that out, and they're having, because it takes so much time to understand, okay, how much cash do we have right now? Then it becomes really difficult to say, okay, well, how much cash do we have in the future? And if you have, I mean, even that process of understanding how much cash you have in the future can take a lot of time if you don't have those robust data systems in place. So I guess sort of that would be my first step, would be understand how much cash you have right now, get the data systems in place to manage that uncertainty going forward. So that's the first sort of foundation. And then second, it would be integrating tools like sort of that give you that 360 view. I think the benefit of having like a cloud accounting system in-house and that technology, and leveraging the insight and the training that people like the UHY team can give you on those tools, can really help you build an understanding of, okay, what exactly am I going to expect over the next 13 weeks or 3 months, potentially 6 months. But I guess with the impact of the pandemic, it's so hard to say anywhere, even 6 months, which might have been relatively easy to predict before, depending on the industry, is becoming a lot harder at the moment. And I guess one of the main excuses that I see is that so many businesses say there's so much uncertainty, there's not much point in looking at my cash flow because I can't predict it. That's like the could not be less or further from the truth, really. I think you have to, it puts such a demand on forecasting to get some sort of certainty. You'll always have uncertainty if you always believe that the uncertainty is too much to project. So getting some certainty in there, building out that, using tools like Float, like other integrated systems, like Fathom can be a good one as well. Chaser too, especially if you've got invoice and bills, you use them quite heavily in your business, and sort of really giving an understanding of, okay, what are my future cash balances going to be, and then with that, using, as Dave said, the scenario tool to say, okay, well, given so much uncertainty right now, what is going to happen if we receive that payment or that big payment late? What happens if that customer who's been paying us late consistently for the next couple of months because they're struggling as well, if they're not able to pay us, what does that do to our cash flow? What happens when we bring staff back from furlough? What does that do? So all these questions, I think, with so much uncertainty right now, the only thing you can really do is scenario plan. You have to plan, as Dave said, for the worst case scenario, but ultimately for all scenarios. Because I remember speaking to one accounting firm earlier this year, and I asked her, how are you guys doing as a firm? And the lady there said, she said, actually, we're okay, because when we saw the first cases come out of Wuhan in China in January, they projected, okay, what would happen if our clients were to really struggle or shut down, if this pandemic went wider, and we lost 10% of our revenue, 10% of our client revenue, 20% of our client revenue. And they're able to plan for that, take some costs, know exactly what to be doing in that situation, and ultimately planned out. So you've got to plan, just plan for everything. Nothing is inconceivable, as this year has shown us. So that would be sort of my general advice there, to help manage the uncertainty. Understand the future cash balance, get the data systems in place, lean on the support from the UHY team to train you up, or train the relevant staff members on that particular system, work with them to improve the quality of the data you have in that, to build out a robust system for projecting the cash flow, the future balances in the future, and the analysis of that using scenario planning.
So you both touched base on scenario planning, which is perfect actually, because we're about to move on to scenarios, and you've both given some really good answers, so thank you for that. Moving on to scenarios, I know what you're all thinking. It's impossible to know what the future holds. We've had some great advice from Sam and Dave already covering planning for uncertainty and making realistic assumptions. To help with this, I would also recommend including a sensitivity analysis in your cash flow forecast. Consider a good, bad and middle ground scenario like both Dave and Sam have suggested. This will enable you to flex your cash flow and provide an early warning system should the business be heading towards the worst case scenario. I think now would be a perfect opportunity actually for me to hand over to Sam so he can provide you with a quick overview of Float and how you can plan out different scenarios really easily.
Thanks, Emily. So just to jump into Float, everyone, so this is Float as it stands. I'll make that a little bit bigger for everyone in case you've got some small screens. So in this hypothetical scenario, to demonstrate the importance or the value in scenario analysis, I've created this demo company within Float called Sam's Stack Sandwiches. Now, this is an example I've used before, and Emily's heard me use it a couple of times. She's probably sick of it, so I need to get, I think, a bit more creative next time around. But basically, in this scenario, let's say I'm right in the heart of Edinburgh, where the majority of the Float team are based. I've just been able to open back up my sandwich shop. I've had my staff on furlough for the majority of this year, and I would ideally want to bring them back at the end the end of October, so bring them back after furlough and not make them redundant. They've been working with me for a long time. We've got a good team together, a good sandwich shop. I don't want to lose that. But you can see with the forecast that I've built at the moment, I've got currently, you can see my runways up until the 5th of November. So actually furlough ends on the end of October. I've only got 5-6 days before I actually run out of cash. So based on my current projections, it's not going to be possible for me to actually bring back my staff after furlough. So what I could do in this particular situation is get in touch with the UHY team and say, okay, well, what are my options here? I really have this goal in mind. I really want to bring my staff back part-time, full-time, but I don't want to let them go. What can I do? What scenarios can I run? And that's what folks are going to enable you to do when you work with a UHY team. So one example or one idea that you might want to come up with, or you'd be able to discuss with the UHY team, would be, okay, well, what happens if we pivot or diversify? I mentioned earlier on in my example of that coffee shop in Cardiff that started to, or pivoted for some income to deliver oat milk throughout the city. There's no reason why I couldn't necessarily do something similar. And I know a lot of businesses, certainly a lot of restaurants, some of my favourite here in Edinburgh, have moved to go online with Deliveroo. So it's given me a lot more options. It's great for a good Sunday night, good takeaway dinner, but not necessarily great for the waistline. So in this particular example with Deliveroo, I can say, okay, well, what happens if I bump my revenue up here? Then you can see that extends my runway into the 9th of April next year. Now, it's not fantastic, but at least it gives me something to work with, some time to think about, okay, what else can we do to bump up the traffic, either that we have coming through the shop, or to think about other revenue streams or where we can cut costs as well. But if that's not an option, or you want to consider something that's perhaps a little bit easier to do or more straightforward to do, a common thing that's happening for a lot of businesses right now would be to draw down on the bounce back loan. But you can see in this particular scenario, that's going to give me a little bit of a boost, but not so much here, as you can see. So I think, although I would want to draw down or could draw down from the bounce back loan, I think a more sustainable approach would be to actually try and diversify and offer up a new revenue stream for my business. And these are all the strategic decisions that you want to consider and that the UHY team can help you build and float, but also, I guess, work through how feasible they would actually be as well. Because with the upcoming, tax liabilities as well, you can see I've got a VAT line here. I've got my £5,000 VAT payment, and I think, for, I guess, having knowledge of your tax liabilities is going to be super, super important, as we've established throughout this presentation. And the UHY team can obviously help with that. So get in touch to make sure you're planning correctly for that period, or for that point in March where those are going to be due, and also the repayments as well for the bounce back loans and T-bills applications next year too. And if you've not made a decision on a particular scenario and you want to consider multiple ones at the same time, you've got the functionality to do that in Float as well. You can see the scenario comparison in this section here. If I say, okay, what are the next 3 months going to look like? And I'm just going to add those different scenarios. So you can say, well, I don't know which one, we've got multiple options, which one looks the best? And you can see here that just based on even just looking at the graph itself at the moment, you can see that the deliveries, opening up that as a revenue stream makes the most sense for the continuation of my business, the viability of my business going forward. So that's the thing that I'm going to work towards and think about, okay, how do I start to open that avenue up? And so these are it's just a taste of some of the things that Float with UHY support can help you do. I think training is another thing, training on how to actually build these forecasts out so you can work with it and get used to it yourself, sort of building out the budgets and all the other elements that go into building this forecast. Again, UHY can help with. So there's a real breadth of support the UHY team can give you, not just on the scenario analysis, albeit one of the most important parts. So yeah, I'll hand over back to Emily now, but yeah, thanks for everyone listening to that quick introduction to Float there.
Thanks, Sam. Appreciate the demo, and I love how easy Float is to not only understand from a non-accountant perspective, but also how easy it is to use. I've used Float for a number of our clients already, and I've found it so easy. You can plan ahead for the what if scenarios, such as sales were to drop by 10%, 30%, or 50%, what is the impact? So with having this knowledge available in real time, my clients have been able to see where the pinch points are and decide on alternative funding to bridge those gaps. So UHY, obviously we can help you. We hope the short demo has been helpful from Sam. If you've got any concerns about your cash flow or you really don't know where to start, talk to us. We are here to support you. We can also provide training, like Sam said, on Float, or prepare the cash flow forecast and the scenarios for you. So this is kind of bringing us to a close. I'm just going to see if there's any questions from the audience. Okay, so I've got one here. Will you be covering how it links into Xero? We can link it into Xero for you. Obviously, just get in contact and I can do that for you. I've got another one here. What are some of the examples of the approaches those organisations are taking to plan for this uncertainty? So I think I'll give that one to you.
When you say what particular organisations, any?
Doesn't say, it just says those organisations are taking to plan for this uncertainty.
Yeah, so I guess I would sort of reiterate what I mentioned earlier before. I think it's very difficult to plan for uncertainty if you don't have sort of a central data set there to work with, and using things like Xero is going to be massive. Xero QuickBooks and Free Agent, any cloud accounting system, and ensuring you've got a solid data feed there. Because I guess if you're stressing so much about, you know, trying to work out what your cash balances are, what they're going to be, you've got no time to actually act on that point. So all your time is spent working out what the problem is, as opposed to what the solution is actually going to be. And I think that's what having robust data systems like an in-house, like a built cloud accounting software, Xero, QuickBooks Free Agent, and then, as I mentioned before, HubDoc, Bank, Save Analytics, those sort of tools to make sure you've got that foundation, so that it's much easier, it's much quicker to get access to exactly what the problem is and highlight that to you so you can start to act on it. So it's really about time to solution, I think, is the key thing there. And I guess it's hard to get around the fact that planning for the uncertainty, one of the things we've seen mentioned or showed before, that base forecast within Float, and before people were using that to set, okay, what's the most realistic anticipation of what I think will happen, and I'll set Float up in a way that builds that out. But now people you're seeing just like sort of what's the most conservative look like, if everything was to stay the same, or worst case scenario, taking that as like that's expected to happen, and then you've got worst cases or slightly better cases from that. And as Dave said earlier, it's not being pessimistic, it's just making sure that you're protected as a business. So I don't think there's really any wrong scenario that could happen, because the unthinkable has happened for a lot of businesses. So I think getting really creative with what you could do to help your business, but also what could go wrong, I think is the best way to plan for uncertainty, and using automated tools like Xero, QuickBooks Online, Free Agent, Float, and the support of the UHY team to help you build out what those scenarios could look like is the best way to plan for that uncertainty, I think, full stop.
Yeah, sure. And just a couple more questions, and just cautious that we're running out of time. How often is Float synchronized with Xero?
So it'll be every 24 hours. So Float syncs every 24 hours. We'll pull through all your reconciled transactions, all any kind of new invoices or bills created, and then you'll be able to access your full list of chart of accounts as well. But you can, of course, I don't know if you saw on the top right hand side, you can sync it at any point. So if yourselves or the client has done a bunch of work in Xero, you can click that button, refresh it, so it pulls through all the up-to-date information. So that's really the key thing, is it being up to date.
Yeah, sure. And there's one from Clive Taylor. Can Float be linked to a local version of QuickBooks, i.e. not cloud-based? I can answer this one for you. No, it can't.
Good question. Yeah,
It's better to be online with a
yeah,
cloud-based software anyway.
that's right. Yeah, so it's QuickBooks Online as opposed to the QuickBooks desktop version that we sync to. Yeah, that's right.
Okay, perfect. So I'll just wrap this up as it's now 11:45. If any questions that we haven't answered, we will follow up after this webinar, and we will be sending you all a recording of this webinar should you wish to watch it again or share with your finance team. We will also be sending you a short video of how to use Float and to get set up. Should you have any more questions regarding access to Float or how we here at UHY can help you prepare a cash flow forecast and scenario, please do get in touch. Thank you for your time and thank you for joining on to the webinar. All that's left to say is stay safe, stay healthy and enjoy your week. Thank you.
Thanks, everyone.